Hey everybody, it's Pete. Welcome to Stock Trading Pro. How's everybody doing today? In today's Stock Market Live, we got a ton of stuff to talk about. We're going to talk about short-term trading. We're going to talk about long-term trading, day trading, swing trading. We're going to obviously talk about Netflix stock, Netflix earnings, the implosion that we saw in Netflix earnings, how that's going to affect the streaming services. Is there a different trade to make in Netflix? Is it a short sale? Is it a value play now that it's gotten crushed? Or do you simply leave it alone and day trade it like we've been doing with Twitter stock lately? Also, we're going to walk you through my favorite day trading indicator. We got a video that I'm going to give you a little bit later. We're going to talk about how it led to one of the most amazing days yesterday. And it was screaming, today, hold those trades longer. Today, add a little bit more. Today, get a little bit bigger profit target. All in one indicator that is by far my favorite day trading indicator, and it was yelling at the top of its lungs yesterday. I'm going to walk you through that today. We're also going to talk about sector rotation as we do, but we're going to get into a little bit more detail. Just going to tease you a little bit about what we're going to talk about here today, which is this. We're going to break it down and specifically talk about these two sectors, consumer cyclical and consumer defensive, because there are trades in there right now, maybe even position trades, which again, I keep talking about it every day. You go out of the house, you get lunch, you get dinner, whatever it happens to be, even just getting gas right now. It's expensive. The world is expensive right now, regardless of your short-term versus long-term perspective. That's not changing, which means that our dollar is not going as far as it did even 3 months ago. But how does that translate into a trading opportunity where you start to read the headlines, put those pieces together, and let's talk about it right now. Netflix versus Roku, Netflix versus Disney, Netflix versus even Amazon, which has a stock split coming up in a couple of months. We're going to dig into all of that, and we're going to give you some ideas on stocks on both sides of the stock market. Which ones are the best stocks to buy now? Which ones are the best stocks to buy for 2022? Talking about trading and investing, as well as on the short side of things. We have a ton of stuff to talk about today. I'm really excited. I just want to make sure I say hello. John Lash, I'm going to say hello to the Johns today. John Lash, John Weinberg, John Odoran. Good morning, guys. Welcome. Mark Badesh, I saw you had a call yesterday. Thank you so much for being on that call yesterday. I'm very excited. We obviously have a lot of stuff to talk about, so stick around. I'll be back in just 1 second. Okay, so thank you so much, everybody. We're actually going to dive right into it. The big thing we want to talk about is we're going to talk about first the implosion of Netflix yesterday and what that means for a little bit longer term trade. Then we're going to work our way into this chart, which is going to be something that I'm going to do a little bit of a deep dive into because literally I was jumping out of my seat yesterday when we were talking about I do a broadcast every morning for our Discord community from 9:30 to 11:30 every morning. Then we have another power hour in the afternoon. But yesterday was one of those days. And if you watch our channel often, there's a lot of time that I spend on saying, keep those losses reasonable, keep those losses reasonable. Because then when you have an opportunity to size up and make bigger gains, that bigger gain in your trading account pays for all those pesky losses. Yesterday was a day to make more money. Yesterday, as a day trader, despite the long-term economic outlook of the market, was a day to be a buyer. All of the indicators that we saw across all sectors, and we'll actually pull that up for you here as well. Let's actually get into that, and then we're going to get right into Netflix. So you can see the sector rotation coming into today. This was yesterday. It was very broad-based. The week is now strong. Energy continues to be at the top of the list. Not really one of the greatest stocks to be trading right now. And consumer cyclical actually bounced yesterday as well. But believe it or not, that's not going to end up being the list of stocks we're going to take a look at, because consumer cyclical, by its very nature, means you have extra discretionary income. They just popped yesterday, probably a little bit more short covering than it was fresh buying. But first, we're going to take a look at Netflix. We're going to break down that stock and do a quick dive on whether or not is it a buying opportunity now. And obviously what we're talking about is this. Netflix shares down 25%. I believe they were down even a little bit more than that before. I think they were down as much as 27% right now, which has it down $94 compared to where it was yesterday. Obviously, even if we bring in the most conservative moving average, it is well above that now. It's all the way down at 250. And if we go out to a longer term chart and see the last time it was down at this 254 level, it's been years, literally years. And the problem now, this is actually a little right about there, big support level. The problem that they have now is the first mover advantage that Netflix had is gone. They had a big head start during the pandemic. Their stock was spiking tremendously. Everybody was home. Now they're having password issues. They're also talking about now using ads very similar to what was supposedly ad-free radio if you signed up for Sirius XM or those Sirius XM or XM satellite, whatever they're called at this point, where there's commercials. I couldn't believe it. The first time I logged into that on my car, I was like, I don't understand. Why am I paying for commercials? Netflix is going to start working their way over to that soon as well. At least they're considering it. Big companies like this, they throw it out there, see how everybody reacts. Bottom line, from a competitive business perspective, the streaming services are very competitive right now. I think I talked about it yesterday. In case I didn't, I saw an interview with Sylvester Stallone yesterday. Obviously, everybody knows who he is, right? The question that the guy asked during the interview was, if you were getting started today, what do you think about movies and movie theaters? He said, there's no way in the world I'd be making movies right now for a movie theater. I'd be doing everything streaming. It's just too easy. And he said, you could tell the story over time as opposed to jamming it in there into just a 90-minute to 2-hour feature film, which makes sense. I don't know if everybody else has watched The Dropout about Theranos. That was like an 8-part miniseries, just fascinating. I can't imagine how they're going to tell that. I think Jennifer Lawrence is going to be in that movie. So anyway, is Netflix a buy right now? Is it value? If you remember, I'm going to go back out to the daily chart over here. So anyway, let's get over here. Just the big number with any of these subscription services is their subscriber growth or their subscriber losses. So if you remember, this is 200,000 subscribers lost during the first quarter. Now, the big thing we talked about recently as well is a lot of these earnings that are coming out right now is for 2022. So we are starting now to see how companies are doing now with inflation, higher interest rates, and going forward. It's the guidance that you really want to pay attention to. So Netflix guidance was not good. Subscriber growth was not good. However, now we have this conundrum. We have this conundrum that it traded down to a 3-year low. Let me go back out to the monthly chart. And you can see once, twice, 3, 4 times that it got down to this 254, 255 number. That's where buyers stepped in. Now, again, it's not 2018 anymore. It's not the start of the pandemic anymore. This is a big difference. So what I'm looking to do, what I'm looking to walk the community through today is it's going to be short-term trading right now until the dust settles. We do have that big bid area down there for Netflix at 253. Does support and resistance always hold? No. It's us putting together an argument for where buyers or sellers did something significant and looking for them to step back in. Now, here's the big problem or the big challenge that a lot of traders have is that significant level still powerful in a different market condition 2 or 3 years later? That's what you have to say, because buyers stepped in at that price based on future cash flows and based on business at that moment. Think about it. 3 years ago, we're talking about go back over to the chart. We're talking about 2018 and 2019 and heading into the pandemic as well. A lot of the streaming services that are out right now were not available. They certainly weren't as competitive. Nobody's home now. Hopefully the pandemic is over. We're actually getting back to normal life. Is that support level from 3 years ago still valid in today's market condition? Is the same reason buyers would step up and pick up shares at that same level? Now, if you remember, I want to say probably around 2 months ago, we can actually go out to the daily chart right over here. Bill Ackman, after this big gap down, I believe Kathy Wood sold it over here. Bill Ackman stepped in and said, I love it at these levels. Well, if he loved it at these levels at 398, how much does he like it now at 254? Is he doubling down at that spot? Is it a better position? Remember, the smart money, the deep pockets, the reasons that stocks go up or down is because of the future cash flows that they're paying for at that stock price. We all know earnings per share. Earnings per share is based on the stock price and all these other things that are going on behind the scenes. Well, is this current stock price the stock price that matters now, where the future cash flows of Netflix are now in line? A $94 drop is a really, really significant drop. And that might be making the numbers come together a little more. But remember, everything we talk about with earnings, even if you're not an earnings guru, which quite frankly, that's a whole other area of trading stocks. Expectations are what we're actually buying. We're buying the guidance going forward. We're buying the expectations of future cash flows. But remember, don't forget that buying part. What are we paying for that, for those future cash flows? So as of right now, for me, for Netflix, I'm waiting for the dust to settle a little bit here. I'm going to give you another stock that's a very similar situation that actually reported poor guidance, had a big gap down, rallied that entire day, went sideways for 3 days, and now I'm actually looking to short sell that stock, looking for the poor guidance going forward to see the stock go down. So I'm kind of comparing that to Netflix right now, where I'm just looking for short-term trades in Netflix, which means from one day to the next, reading the order flow and reading the tape. But I want to show you that other stock that I'm talking about, which is this guy right here, BBBY. Over here, guidance was really not good at all. And you can see where it closed and where it opened the day after guidance. Now we have 3 days of consolidating in the stock. And I just want to make sure that we put volume in there. So big move down and virtually non-existent volume during this pause. So again, this is the template or the roadmap that I'm going to be looking for in Netflix. We have this big push down. We're going to be reading the one price that matters during the day, looking to day trade Netflix, maybe even swing trade it a little bit, because now the dust is settled. If you can work your way into a trade and you like it, if it does catch a bid and bounce a little bit, maybe, but working your way into the position, that's the smart thing. But the chart of BBBY, Bed Bath and Beyond, is exactly what I'm looking for. So maybe the day of the earnings that comes out, we get a spike. Next couple of days, the stock consolidates, and I'm actually looking for another move to the downside. And in this case here, again, not a lot of meat on that bone, but it's really more about the structure of the trade for Netflix, because Netflix obviously has a much wider perspective. By the way, there's one thing I want to make sure you talk about, because we have been opening the kimono a little bit on short selling opportunities, and I've been talking about them quite a bit here on our Stock Market Live every day. Something that's super important is we spend a lot of time game planning, and it's a really big part of our boot camp. Make sure that if you create a game plan for short selling a stock, log into your trading platform well before the market opens and make sure that the stock is available to borrow for a short sale, because a lot of these stocks are now HTB or HB, which is hard to borrow. And you create this big, beautiful game plan about how you plan on making money if the stock goes down, whether you're buying a put or short selling the stock. And then the market opens and you find out, it's not available. I can't even trade it. Make sure you log in well before. Oh, by the way, how do you like our new sign back there? The STP sign. My my wife built that over the weekend. I actually love it. So anyway, so I want to get now into the indicator that I was talking about yesterday. I'm going to share an email with you. So obviously, we're talking about this right here. Okay. So you've heard me talk about this quite a bit, New York Stock Exchange indicator, and that is the reading that we had yesterday. So the big thing I want to talk about here, which is fantastic, is that you've heard me talk about, all right, small losses, small profits, and then bam, you get a couple of trades that follow through. But the big key is, now we're talking about day trading, and then we're going to go back into a little bit longer term trades. For the day trading perspective, the big key is to understand when there's bigger profits on the table. Some trades, cash flow, you're getting in, getting out, and looking for the next opportunity, right? And if we go out to the little bit longer time frame on the SPY, let's just bring that into the picture here for a second. And you can see here pretty much actually, you know what? Let me go, let me get this guy off the screen here. Let me pull that out. And let's go over to the 60-minute chart, because you can actually see it a little bit cleaner here. We have this trading range here. So in this window where the market is not really that obvious, we're kind of just dancing around in here. And basically the longer term picture is, and again, longer term picture, we're talking about both recently and we're talking about since the end of March. We're bearish to neutral with a potential change of trend to the downside. But what's kind of interesting is you can see here yesterday some explosive moves to the upside, and especially here in that 2:30 to 3:30. So 9:30 to 11:30, and then 1:30 to 3:30. So there was actually 4 hours of trading activity yesterday that were just absolutely amazing. Now, here's the big thing. If you get frustrated, I'm sorry, I'm pointing. If you get frustrated by trading losses, it means one thing, only one thing. It means that your trading business is not making enough money to pay those expenses. Yesterday, and I'm going to show you this one more time, and I'm going to point you in the direction of a video. This reading right here, just to give you an idea of what this means. This line right here is 0. So the New York Stock Exchange tick readings, what they do is they measure upticking stocks versus downticking stocks on the New York Stock Exchange. So just to keep it super clear, because it looks like there's a lot going on there, but there really isn't. I'm going to teach you how to use it right now. If a stock is upticking, that means it went from 50 to 50.01. If a stock is downticking, it went from 50 to 49.99. That's essentially what it means. So what we're looking at in the tick indicator here is how many stocks are upticking versus downticking. So 0, that means that it's neutral. There isn't a dominant buying or selling pressure in the market at that moment. When stocks go up to plus 500, that means 500 more stocks are upticking versus downticking on the New York Stock Exchange, and that's okay. It's okay. Plus 500 and higher, let's say plus 600, all the way up to plus 12 or 1300 is very bullish, and those are opportunities where something obvious is happening. But what's really interesting, and I'm going to put this on the screen again, if you could just do me a favor, make sure you take a snapshot of this. This is yesterday, obviously April 19th. All the way up to 11 o'clock yesterday, which was the first 90 minutes of the day, and it actually worked its way even further. Remember what I just said about 0, right? Plus 500, minus 500, and 0. So I want you to snapshot this, because what you are looking at in this moment in time right now is a moment where there were hardly any sellers at all on the downside for almost the first 2 hours of the day. When you are driving your car, you need to recognize, again, stop and go versus I'm the only person on the road, arm out the window, crank the radio, and you are cruising. And those are the ones that you enjoy a little bit more, right? Yesterday, we had that kind of opportunity in the market where the New York Stock Exchange tick reading and the VIX reading, the CBOE volatility, were absolutely on the same page, and we call that harmony. So you want to recognize opportunities like this where, look at over here the day before. This is 1:30 in the afternoon, 2:30, 3:30 in the afternoon, the day, negative 1,000. So this closed very, very weak the day before, which is the 18th, right? We had that little rally at the end of the day, but look at all the way down to negative 1,000. So you can get a picture here. Look at the afternoon the day before, and all of the selling below the 0 line, going all the way down to negative 1,000 versus yesterday morning. Now, I want to explain to you why I love this indicator, and I lean into it hard every single day. And this is the kind of stuff that I walk everybody through every day when I'm doing my audio broadcast. This is just a little sample of me talking really fast, but I'm doing this when the market's open. When you recognize these things, and the reason I love this particular indicator, this is not stochastics, RSD, RSI, or any of those other kind of things. Those things are a derivative of price. They're not actually price itself, but the tick indicator is such a pure, absolute reading of what's going on in the market right now, because there's no way of misreading. There's more stocks upticking versus downticking. So what we actually saw here yesterday in the afternoon was hardly any stocks being sold like they were the day before. Look at all these negative readings over here, negative 500 and beyond to the downside, which was heavy selling. So right here, I don't know if you just logged in. I already gave my reading on Netflix. We talked about that at the beginning of the call. You can watch the replay again. So what I'm talking about here is at the core of it, when you see readings like that is when you should make more. And we talk about it a lot, that there are moments of time when you should not be holding longer. You should not have bigger share size. Yesterday was not one of those times to be squeamish. Yesterday, in our whole community, I just can't even, the amount of credit that I gave to our community yesterday, because our entire community was on the same page, reading the tape, reading the order flow, and helping each other, this stock, this stock, this stock, and the ticks and the VIX. And sector rotation, which is what I'm going to get into next. You need to understand when more money is on the table, when you have an amazing opportunity in front of you, which now we're going to transition that over into longer term plays, consumer defensive versus consumer cyclical. Okay, and I'm going to walk you through just what those are right now. We're actually going to go over here and we're going to work our way over here. So I want to specifically stay on these two right now. This is a much bigger program that we have. The point that I want to get across is this: consumer defensive, sometimes known as consumer staples, okay, is stuff that you need regardless of your current financial situation. So before we even move on from that, think about inflation and rising interest rates and all that kind of stuff. What types of products do you need and you will pay for no matter what? What companies make those products? Okay, and I'm going to show you one that's a really good example coming up. Next, consumer cyclical. Okay, sometimes also called consumer discretionary. All right, goods and services for which demand depends upon financial status. And another way to word that, higher price, but financial status can also be worded as how far your dollar goes now. Think about buying lunch. Probably 3 or 4 months ago, going out to buy lunch was $15. Going out to buy that same lunch now is probably $22, whatever, wherever you go to lunch. So your dollar is not going as far as it did. So those things that you would like to have, they're not necessary, are going to start decreasing in your day-to-day life until that changes. Either you start blowing it out of the water with the amount of money you're making, or those prices come down. So we're essentially talking about inflation, inflated prices on everything. But now you need to make a decision. Am I buying Band-Aids, alcohol, and cigarettes versus am I buying a new Tesla? That's a big decision for everybody right now. So what kinds of companies are going to be affected the most? So we're going to work our way into that. So consumer staples, otherwise known as consumer defensive. We're talking about Costco. We're talking about Walmart. We're talking about Pepsi. We're talking about Procter & Gamble, those kind of things. And actually, Procter & Gamble, now I'm talking about, we actually had a big move in PG yesterday just to really bring this home. You can see what it did yesterday. And this was actually one of our favorite setups yesterday after it pulled back for 2 days. And you can see the support that it hit. So this is a really, really big part of what we do. So I want to break this down a little bit more as far as the indicator. So what I want to do is I want to walk through here, this video here. It's about a 13-minute video, something along those lines, maybe a little bit less, but I walk you through exactly how to use the New York Stock Exchange tick indicator and the VIX indicator in that video. So there's a link below in the description, and I'll post it at the end of the video if you happen to be watching this on a replay, and you can click on that link. Trust me when I tell you this, and I don't say that word trust that often. We're on YouTube. I got to be careful about everything that we say. Everything is for educational purposes here. When you understand how to use the tick indicator, and it's a day trading indicator, I want to be clear about that. When you understand how to use it, you will feel like you are trading naked, not using it. You will question how you ever traded without it. That's how powerful it is. Okay. And I just want to answer a question here because it's actually pretty interesting. Okay. Is it a momentum indicator? No, that's not what I'm talking about at all, John. I don't know if you just logged in and didn't hear the beginning of what I talked about before. It's not a momentum indicator the way I'm using it. It is telling me the degree of buying or selling pressure. I want you to really think about what I just said because it's very, very different from a momentum indicator. I know some people use it as a momentum indicator. That is not what I'm talking about right now. So thank you for the question, John A., but that's not what I'm talking about. When we are talking about using this indicator, we are talking about how dominant is the buying or selling pressure. And in this case right here, there was literally no selling pressure. So there's a difference between no selling pressure and what that's telling us from using it as a momentum indicator telling us when to get out of the trade. So I want to be very clear. I am not talking about using the tick as a momentum indicator. Write this down. It is critical. We are talking about the strength of the buying and selling pressure in that moment. And in this case here for the tick, it was a 2-hour window that there were virtually no sellers. Think about that. If you can go back to yesterday, knowing what I just taught you now, how would you treat your day trades yesterday? And I'm going to give you an example because this was something I was really proud of everybody in the community yesterday. We actually were talking about Plug yesterday. If you remember, Plug stock had pretty good news yesterday. The deal that they had with Walmart, and we'll just pull this up on the chart. And you can see the day that it had with the bullish gap, right? And a little bit more price action intraday. So it was interesting because when the community is working together, and this is really one of the benefits of working in a community where we're all looking at the same strategy instead of thousands of different strategies at the same time, which quite frankly makes things confusing. One person was actually in plug yesterday. We were walking in and out of the trades all day. We were talking about the strength of the market. Somebody talked about getting out of the trade, and 3 different people in the community said, why? Think about that. The community was helping them hold on to the trade longer because everybody was recognizing all of these pieces that go into building the order flow, reading the tape, and making those trading decisions. So I'm going to tell you right now, if you are struggling and you get angry about trading losses, it just means one thing. At this moment in your trading career, you don't know yet when the conditions are fully loaded in your favor to make bigger profits. And I promise you, it is not about your trading losses that should frustrate you. What should frustrate you if you're not making the stock market make you money, it's not the losses, it's the wins. It's your winning trades that are holding you back because you don't spot when the opportunity is better. We're obviously just talking about one little piece of that right now, but you can see the trade scenario here in plug. It had a really powerful move even after the gap up. It was basically, I don't know, like another $2 or whatever it was off of the low, but it's not so much the dollar amount, it's the opportunity to hold that trade. Now, here's where a lot of traders get into trouble. Stocks rally, they pull back a little bit, and they're like, I got to get out of it because I got to book that profit. No. Sometimes if the market conditions aren't good, and now I'm going to actually show you what that means, and we're going to use that same indicator. So again, working our way back into that indicator. So, all right, I am actually, excuse me one second. So remember how we talked about plus 500 and minus 500? Well, these 2 levels, other than 0, are the most significant levels. So here's what I want to get across to you right now. Remember how we just talked about there are relative strength or quantity of strength or quality of strength of buying and selling. So we know that above 0, and again, I'm going to really give you a good visualization of this. Above 0 yesterday, there was no selling. So we at least had a lack of selling yesterday. Plus 500 and minus 500 are kind of neutral. There's activity, but there's no dominant force. When stocks are trading between 0 and plus 500 in the tick reading, or 0 and negative 500, but can't get out of that band, plus 500, negative 500, those are opportunities to be trading for cash flow. Now, obviously, you can go up the stock market power pyramid a little bit, go into the industry, go into the sectors, go into the groups, and find some opportunities that are trading well. Obviously, yesterday we picked up on plug, and plug was a big news story with Walmart. So these are the clues that you absolutely need to be searching for to tell you what kind of a deal is on the table right now. What is the market making available to me right now? And I'm going to leave you with this. If you think every trade has the same profit potential, that simply means you don't have an edge. And how do I know that? How do you know whether or not you have an edge? You have to ask yourself, do I trade the same share size all the time? Do I look for the same profit targets all the time? Do I even know what my profit targets are? I want to touch on profit targets just as a addition to what we're talking about right now. When we teach our traders, we never want to put limits on how much somebody could make on a trade. However, you do need to justify the risk to put the trade on in the first place. So if you think about it, let's say you go for a real estate deal and you're like, all right, I got to put $10,000 down. I could possibly make $20,000. I'm okay with that because I think there's a pretty good chance based on the houses in the neighborhood, I think I can make $20,000 in exchange for putting up 10. Trading's the same way. You need to at least justify a likely profit target, an initial profit target to accept the risk on the trade. But once the trade hits that target, then you shift over and now you're trading a little bit bigger picture and you now let the stock tell you when it's turning around. So you have your entry, your stop loss, your initial profit target, and then somewhere higher than that, hopefully, if you get follow through, if everything is stacked in your favor, like we're talking about right now, then you can actually hang on for bigger profits. But remember, there's a difference between initial profit target for the risk versus the conditions that are better where you're going to shoot for a bigger profit target. So all of the look, if you're new to our channel, first, I hope that you hit subscribe because we kind of get into these really good lessons every day. But if you find this kind of stuff valuable, do me a favor, hit that subscribe button. I'd really appreciate it. So anyway, the moral of today's story, monster move down in Netflix, finding support exactly where it did in 2018, 19, in the beginning of 2020, which is right around that 254 level, I believe it was. Let's just pull that back up on the chart. We'll go back out to the monthly and give everybody that level. So again, we're talking about right here, which is literally right where it's trading. So not shocking. So the trade there for me right now is I'm looking for that support to hold, maybe day trade the stock pretty aggressively because volume and volatility should be through the roof. After a couple of days, the dust settles. We're going to trade it outside of what happens after everybody on Wall Street has a little bit of a chance. Short-term day trade around that 253 level. If it breaks below that 253 level, I'll be looking to short it. So that's really the line in the sand. That's the one price that matters for me in this particular instance. Bigger picture, longer-term type ideas. We're looking at consumer staples, consumer defensive stocks to be a little bit longer-term plays. Oh, that was actually the one that I wanted to talk about, which was Philip Morris. Fits that category. Let me actually zoom this out a little bit, and I'm going to put the 50 in here. You can see how it's holding perfectly, and it has some more room to go to the upside. So again, thinking about consumer discretionary versus consumer cyclical, consumer defensive, consumer staples. Again, that's all the stuff that you need no matter what, right? Food, beverage, tobacco, household, personal care products. Consumer cyclical, a little bit longer term. These are the higher price stuff that you don't necessarily need, but want. So now everybody's going to make a decision. Has anybody gone out and bought a car right now? I think used car prices are probably twice as much as a new car. You got to make a decision. Is it really worth it? Look at the housing market right now. I mean, people are selling houses for 30, 40, 50% over the asking price, and they're massive bidding wars. So you got to think, do I really want to do that? Do I want to bury myself when the market gets back to normal? These are all things, consumer defensive versus consumer cyclical. Find the stocks, run the scans, go to FinViz or wherever you do your searches. Consumer staples versus consumer cyclicals. Which of those stocks? McDonald's right now. McDonald's is actually going up right now because people are getting into cheaper meals as opposed to going out to restaurants. These are all the little things you really have to be thinking about. And Netflix is probably one of the bigger consumer discretionary things right now that took a big hit. Let's see if support comes in at 253. That's going to be the level I'm going to trade around it right now. If that level holds over the rest of the week, I might consider looking to start building a position, and we'll talk about that on Friday. All right. Thanks so much, everybody. I really appreciate it. Thank you for joining me here at Stock Trading Pro. Again, if it's your first time, do me a favor, smash that like button, hit subscribe, and make today awesome. We're going to have great volatility again. Oh, by the way, the video I was talking about before, click down into the description, and you can watch that video, a much more detailed description of how to use the tick indicator. All right. Have an awesome day, everybody. Take care.